Hey guys, it's Peter Cunha, broker owner of Open Doors Realty, your New Jersey real estate giant. I got my boy, David.baum from Cross Country Mortgage. How are you, bud?
Doing great, Peter. How are you?
Good. We were just talking about, there's still multi-offer situations on quality homes, and how can we differentiate our buyers to kind of give sellers more kind of assurances that they're qualified for a mortgage. And, you kind of had suggested a really good thing that had to do with credit.
Yeah. So basically, right, everyone that wants to make an offer, they usually either need a pre-qualification, which is pretty much garbage, right? You have a pre-approval, which is someone fully verifying all the documents, which I make sure that I get, and my pre-approvals all say fully verified everything. But the next step to take that beyond to having a lot more power potentially would be for a buyer to get a credit approval. So what that means is that as we get their documentation and we work up a pre-approval, barring they're not an immediate rush, because obviously it's going to have to go up to underwriting. We take the file, we're going to have to get some basic disclosures filled out and signed by a borrower. We send it to underwriting, and then the file will get reviewed. It's going to be a fully underwritten approval. So they're probably going to still want to make sure that it's, the verification of employment's there, making sure we have the assets and everything there. If we have everything and we can get that approved, that will be basically a mortgage commitment without an appraisal, obviously. So we're going to have to still, borrower can use that credit approval, submit an offer, and take all the guessing game out of it. So if the seller's reviewing offers with the listing agent and sees a pre-approval for 3% down, a pre-approval with 5% down, a pre-approval with 20% down, or sees a credit approval that's already been underwritten, so they have no worrying or guessing game about whether this borrower is going to qualify or not, that will put them in the driver's seat no matter what their down payment situation is, right? Obviously, cash offer, they can't, it's that part is out of the game, but unless the price is right and they're willing to obviously take because they've been underwritten. So
Right.
it is giving more assurity on the seller side, and it is giving the buyers a little bit more power, saying, hey, I've already been underwritten. I can close once I have my appraisal, titles in, and home insurance, and we're good to go. So we can close in as little as 10 to 14 days if you have a credit approval.
So let me just bring out one thing, because I know that as much as we want to have all our ducks in a row, a lot of times sellers just need more time
Right.
to close, right? So assuming the house isn't vacant, we go through the process. They've gone through underwriting. Clear to close could be as soon as 10
10 to
days.
14 days. I mean, typically it's the mortgage process alone, from timelines and regulations and stuff, it pretty much takes about that, because once the initial disclosures go out, there's a couple days, and then the right closing disclosure too has to be sent out 3 days prior to closing. So that typical timeline always still has to be in place, but it can close in as little as about 2 weeks.
Yeah. And for anybody that's watching out there, if you're a buyer and you're in Monmouth County, New Jersey, for example, where it's still pretty competitive, what's interesting about this whole process is you're going to have to submit this paperwork anyway. I know that I get a lot of buyers that are like, why does he keep asking me for updated paper, bank statements, et cetera? It's just it's just to give assurances to the lender that, you're still kind of compliant, or, nothing's changed since the initial kind of review of your paperwork. So
There's a shelf life to dates, right?
yeah.
Pay stubs have a shelf life, right? Your pay stub, someone submits a pay stub on a pre-approval and they don't go find a house for 2 months, and 2 months go by, and obviously we have to update pay stubs, right?
Right.
Or we find out that you change jobs the week before closing and don't tell us, right? We need to make sure we get that kind of stuff updated. So hopefully we have all that full transparency from the get-go with everything.
Right. And one thing that I also want to share, and I appreciate you talking about the credit approval. For anybody that's looking right now in the market, and I'm sure that your pre-approval numbers have gone down a little bit, Dave. Is that safe to say this year?
Actually, our credit pulls have gone up drastically in January into now. However, the transactions, just due to, interest rates in January got better.
Right.
Unfortunately, February, when that bogus kind of jobs report came out, with their numbers, it really threw the market for a tailspin. And unfortunately, the 10-year treasury in January got as low as like 330, which was fantastic,
Right.
is now back to 390.
Ouch. Okay.
And we
Oh,
are basically, we washed away all our gains in January, and it's, we're back to, this is still going to be a battle probably into the third quarter with rates. We're not out of the woodwork yet, unfortunately.
yeah, and again, for anybody that's watching this, why do you need a credit approval? It's like, listen, I've lost a few houses recently, not because my clients or my buyers did anything wrong. They just weren't prepared to move forward. And the scenarios are typical. I haven't listed my house yet. We found the perfect house. And oh, there's kind of this this kind of rush to get the house, but if you haven't done all the due diligence up front, it's really hard for somebody to say, "Hey, I'm going to accept your offer." Even though if you're completely transparent, saying that I have a home sale contingency in order to purchase this house, because turnaround time, chances are you'll probably get a fair price for your house because there's not a lot of inventory right now, but you don't want to be in a position where you have to take a lower offer in order to get the deal done.
Yeah, I mean, we're seeing people right now. They're just trying to see how much can they qualify. Do they have to sell their place? Do they not have to sell their place? Is there equity in their home? Could they
Right.
pull equity out to use for down payment? Well, could they do that? But then could they also qualify carrying the extra payment and all that stuff? So a lot of people are trying to figure out what their situation's going to be, looking at for 2023. And there's people that are also trying to assess, hey, I want to buy in 6 months, but I don't think my credit is stellar at the minute.
Right.
So let's run your situation. Let's find everything out. Let's see what you might be able to do to improve yourself and put yourself in a better position in a couple months and kind of revisit. Everybody is different, but we're doing a ton of consultations right now. Like I said, credit pulls are up, which is a good sign. Unfortunately, the transactions are not amounting with the credit pulls, but that just means that there's going to be activity in 2023. And we need more inventory to come out to help offset. We have a large pool of buyers that are still out there right now. There
Tons.
are some people with, the buyers that they have lost some purchase power, unfortunately, with the rates itself, you know. But in general, just as the rates are up, obviously people's purchase power may come down a little bit, right? If rates come back, then it can go back up a little bit. But there's some people that it doesn't even matter, and they're just, I just want to get the house, and we keep telling people, marry the house, right? That payment, we can get rid of that payment with the refinance in a couple of years. Don't stress about the rates right now; they are what they are, right? It's getting into the house and starting getting that appreciation, of being a homeowner, and some of the breaks, obviously, that you'll have, for, and I'm not a CPA, but obviously, mortgage interest, real estate tax, as long as those are continued
Sure.
deductions, things like that, and, sense of ownership, obviously. So go get that house now while you can. Um, you know,
Agreed.
and yeah, we're here to help.
Yeah, it's funny because I keep going back. I sat in on somebody's seminar, and they asked me if I had any feedback, and I'm like, you need to throw in either the Dave Ramsey quote of like, buy the house. It's buy the house. Don't You're not buying the interest rate. As interest rates go down, refi. It goes,
Yeah.
if they go up, God bless you. And then the Snoop Dogg, the thing that's going viral right now, where it's like, you don't own, smoking a blunt, if you don't own real estate, you don't own anything, right?
Yeah, I like that. Well, the one that's out there where Snoop's in it, and it says how high are interest rates, and he's got, he's just doing exactly what you just said, and he looked pretty, he looked as high as the rates, if not
Right.
higher, and and it's just like a question mark, like where are they going? We don't, we know
Right.
that we've been saying this long. We know that there's better days ahead. Rates will get better at some point in time, but the market volatility is continuing. And don't worry about, the payments. Obviously, you want to try and get in. Some
Right.
people are looking at adjustable rate mortgages instead of fixed rate mortgages. They're doing all different types of things to try and get into properties right now. But it is very competitive. And you drive down the street and you see open houses, and there's still 10, 20 people at an open house. So if there's buyers out there, they're not stressing about the rates as much because they know in the future they'll refinance when they can.
Right. No,
So,
and I'm not even worried. It's just, again, from my perspective, man, it all ties in because there's just not a lot of inventory. I mean, pick any town within a certain budget. Every time somebody calls me and they're like, I have 600,000, I want to buy a Manalapan, right? It's okay. What are your criterias? I mean, there's houses out there, but you're not getting much, right? And you need to move. It's like the rental market right now. It's I have a 2 bedroom, 1 bath in North Middletown, $2,600 for that. And I'm like, people keep saying, wait, when did rental prices get that high? And I'm like, well, it's a special unit, completely redone, the whole nine, but it's still, it's just you're looking at over $2,500 a month just for rent. So it's definitely an option. You just got to be patient, and have your ducks in a row because I can only do so much. But when I have competition, I just want to be as prepared as possible. So,
right.
uh,
And your buyers and yourself could be in that boat with not just a pre-approval, right? But taking that next step, getting the credit approval. But that if that person makes an offer right after their pre-approval, they're not going to have the credit approval because it's going to take a little bit of time to get, right? It might take 2 weeks or so, let's just say,
yeah,
right? It could be a little sooner, but just in general, right, with the process. So how aggressive are they ready to go? At least they got the pre-approval in their hand, right? And then what I'm typically doing is I'm also reaching out to the listing agents with my buyers right now and trying to, you know, reinforce, the strength of the buyers and their qualifications and
yeah,
reiterate that I'm running AUS on files and making sure we have approve eligible and verifying assets and income and everything.
yeah, and it's a twofold thing too. From my perspective, does the realtor know what we're talking about, right? Because chances are the seller has no idea what we're talking about, right? So it's kind of, the way I always kind of bookmark it is, hey, listen, if I'm happy to talk, my lender's happy to talk. There's I forgot what his high note. It's this little program that you can almost submit your offers with, where we do a video and just kind of explain these things. So again, there's another level of reinsurances, and it's just a better way of presenting offers, especially in a no inventory, very competitive landscape. Sellers still think that they can list their house 10, 20% over where the market is. And, I'm starting to see that a lot. People are like, oh, prices are coming down. I'm like, no, they're not. They're just overinflated, compared to where they should be. So
Mhm. Yeah, I mean, there's a lot of strong towns in our area still. There's just
tons.
no inventory, and we're going to continue until we get that, until people's getting ready and put the houses on the market so they can finish out the school year, right? That normal spring market, hopefully we'll get an abundance of listings. I know a family literally just yesterday, put a house on the market
Right.
in our town, and I didn't even know they're just moving out of state, right?
Yep.
And
Seeing a lot of that.
seeing a lot of that down the Carolinas, and
Carolina's the one that I was thinking of.
North Carolina. Hey, I got my mortgage license in North Carolina,
There you go. And
so
that's the whole other thing. Like I'm in a networking group, just high profile agents from around the country that either come from some sort of ecosystem, whether it's Tom Ferry or Brian Buffini. And it's great to have these partnerships because when you can take some of the guesswork out of what the client wants, right? They want to move out of state, right? Who do I hire down in North Carolina, right? Because that's a guessing game too. You want to have somebody that is going to take care of your client, especially when they have to sell here and buy there.
sure.
It's amazing because every state's different. Staten Island, it takes longer to sell a house than it does in Jersey. In Monmouth County, it takes longer than it does in Southern or Western Jersey. And then in Florida, they're like, why does it take you so long? Right? Because they want to close in 2 or 3 weeks. And we just,
Yeah,
we can't accommodate that in most circumstances. But real quickly, how long, what sort of paperwork do people need for this credit
So
approval?
typically the same exact thing as it would be for, pre-approval, just making sure you have everything. If you're a W-2 employee, you need your pay stubs for the last 30 days. If you have any bonus income, overtime income, commission income, you
Right.
need your year-end pay stubs for the last 2 years to be on the safe side, because you have to average overtime, bonus, commission. You're going to need your most recent 2 years W-2s. You're going to need your most recent 2 months bank statements, all pages, right?
Okay.
If you're self-employed, we're going to need tax returns, okay, for 2 years. If there's business tax returns, we're going to need that. So typically, everything you're going to need for the mortgage transaction that I would typically ask for the pre-approval, you have it. The question is how much time does the borrower have to potentially wait for that to get sent up to underwriting, making sure they're ready to go. And it makes it easier for everybody if you can somehow get this, fast track credit approval is what we call it,
No,
because it puts you in the driver's seat,
and
right?
get it done. Just get it done. That's all
Yeah,
I
for
can
sure.
advise the buyers out there. Hey, Dave, how do they get in touch with you if they have questions or they need a pre-approval? I
Sure.
know a lot of realtors are now starting to watch some of these videos because the content's.
Yeah, best way to reach me, 732-853-4969 or david.baum at ccm.com.
And if you're looking to buy or sell some real estate, please give me a call. I can happy to get you in touch with David and the rest of our team when it comes to if you're selling a house, pre-inspections, anything along those lines. So appreciate you guys watching the video. Make sure you subscribe. Thanks, Dave. Always a
Have a
pleasure.
great day, everybody. Take care.